All right, it is Friday the 29th of May, the last trading day of the month, unless you trade cryptos. And I wanted to give a little video update, particularly around MOMO. Let's quickly look at how the week's gone. So indices are dropping off pretty heavily today. There's some consolidation happening. There are several reasons. I would say some of them are the Hong Kong, China political situation. Some of them are the Trump, China political situation. We're also, if we look at earnings, we can tell that we really are at the tail end of things now. A lot of the biggest market cap companies have reported. Some people have done very well over the past month, and they'll be looking to take their profit. It is also the end of the month, and people generally, end of the week, you'll see a pattern of risk being taken off the table, and towards the end of the month is another general time when you'll see people favoring selling over buying. Not always, but pretty often. We're ending the week just 1% up, which is good. It's better than 0% or less, but it does reflect the choppy nature of trading this week. There have been lots of ups and downs. If we take a look quickly, we are probably going to finish the month roughly 7.5% up. So that's good for the year so far. We're beating the S&P 500 by, I think, 12, maybe 14%, which is good. I want to get that up to 20% by the end of the year. If we take a quick look at the portfolio, I will look at the most recent trades. So I opened a sell on the S&P 500 quite late last night. Well, not too late, but last night. Anticipated a drop off today, and you can see I picked up some MOMO positions, and we've got some other bits and pieces here, things that we've traded fairly recently over the last month, doing quite well on average. Sell positions on the indexes being the things that are ruining the green picture mostly, and these MOMO positions have run red because the market has turned. So I mentioned earlier on that I wanted to talk about MOMO. So they reported earnings. Let's take a look at the stock page. They reported earnings, was it Tuesday or Wednesday? There's not a lot of activity on MOMO's page. I don't think a lot of people know about it. It is a Chinese business. They reported pretty good earnings. Let's look at the chart. And since then, you can see they rose in anticipation of earnings, then dropped off pretty sharply afterwards. Not great, but we're not trying to time the market. Looking at the stats, I wanted to check if eToro has included the most recent stats. They haven't, so no, they haven't. They don't have the 2020 results, which we'll look at in a moment anyway. So I'll look at these stats somewhere else. It's always interesting to see what analysts are saying. So analysts are generally quite bullish, hold or buy. I don't really look at the target prices because they're nonsense most of the time, to be honest. Earnings forecasts sometimes are a little bit better depending on, you learn who the reliable analysts are, but generally, people are optimistic. So what is MOMO? A lot of people probably don't know what MOMO is. So they're a Chinese company. They're quite young, actually, fairly young. It started in 2011 by some people that worked in other large Chinese technology businesses. They, as you can tell, they've got a free social search and instant messaging app. They did recently buy another application. Effectively, MOMO is a way to find people with similar interests that you might want to talk to, but also is quite well known as a dating application within China. They've had pretty fantastic growth over the past decade in terms of users, and it's not in here. You can see the thing. You can see that controversially, a lot of people consider it a hookup app. So China, in the past few years, they've really clamped down on certain types of advertising and also media that is put out by these companies to the general population. So for example, they've tightened up sexual content or violent content on advertising services, for example, but also in several other areas. They've also, if you saw my video about QDN, they've also tightened up regulations around lenders. So China's in general, you know, I can't comment much on their human rights, their stance on human rights, but they seem to be headed in the right direction in terms of looking to protect the people from negative content on the internet. Of course, this means that companies have had to adapt to new legislation and tighter legislation that's been enacted by the local government. So MOMO, in short, social app, mostly video. They do have a video service too. Mostly mobile, so it's a social mobile service. They have a video service that is quite popular, and they've got a dating service, an official dating service besides the core MOMO app that people use for dating anyway. So if we look at the MOMO share price, and actually I'm going to use this chart. Let's go a few years back. So the company has had a pretty volatile share price, as you can see, ranging from, I mean, this is 50% volatility within a year. The trajectory has more or less been upwards. I believe that the Chinese legislation started tightening around here and has obviously affected how things have gone. So looking at the chart, it's hard to tell, you know, has this company been successful recently? So that's when we start looking at the fundamentals in a little bit more detail. So this is quite an interesting little piece of information. One of the most interesting will be the EPS growth. So a company's share price is a function of two things when it comes down to it. The first is how much profit are they making? And the second is what multiple is the market giving to that business over and above the profit that they're making. So if a company is highly regarded and is expected to do amazing things, it will have a higher multiple on the amount of profitability that it makes. But having good profitability is also very good. So what we can see here is that from 2015 to 2016, they grew their profit by an incredible 1,000%. The next year, 117%. They dropped off a bit and then it hit 25%. Still fantastic. They had a bit of a hard year in 2019, and that's for a number of reasons, one of which I mentioned, which is the changes in tightening in Chinese legislation. The trailing 12 months, the growth has been 20%. And here are some forecasts. So they're expected through 2020 to grow profit by 31%. 2021, I wouldn't really rely on this number, but 25%. So if we look at the revenue of the business, it's been growing very strongly. The past year or so, it's dropped off as the company has invested heavily in their own platform in being compliant, forcing that their daily active users, their users, to be compliant with Chinese legislation. That has meant that they have lost some revenue and some profit because of that investment. But what we have seen that is, despite the drop in revenue, the profit has actually continually been increasing. So they've managed to optimize their business so that they are still growing their profit despite a hopefully temporary drop off in users and revenue. So if we look at things like the market cap and the enterprise value, the difference between these things is the enterprise value is the market cap minus any debt within the business. If enterprise value is less than market cap, you can tell that the company has a positive cash reserve. So MOMO is currently sitting on a cash reserve of, what's this, nearly $1.5 billion. Pretty amazing for a company that is only 9 years old, also 8 years old. In terms of these are all forecasts. So the forecast PE ratio is ridiculously low at 7.4% for a technology company, and the growth ratio, the lower this number is, the better. At 0.3, it's pretty fantastic. Okay, so what else is interesting here? These figures are in the Chinese currency of yuan, so just beware these aren't dollars, but I think that this number comes out to, well, we saw at the top, roughly $1.5 billion, and analysts are forecasting increases in EPS, net income, and revenue, which is all fantastic. So this is quite interesting, because if we combine the picture of this graph, which let's say over the past 3 years on average has seen stock prices drop to less than half of where they were, and much less than half from the all-time high, it starts becoming a little confusing. This business has grown their revenues every year and has now made the most revenue that they have in the history of the company, but somehow the market is valuing them at a price, at the lowest price in 3-ish years. So why is that? Now this is where we start to speculate. They've been sitting on a lot of cash for a long time. They have used some of that money to invest in themselves because they have had to shrink initially in order to become adherent with the local legislation. So I think the market has probably overdone the selling. There have been overly negative about the future of the business, but the company has publicly said that it is been kicking off initiatives to increase its user base and engagement rates, which would ultimately increase the number of the amount of revenue. And we know that the company is very good at turning revenue into profit. So as long as it can start growing the revenue side of its business, they're going to be rock solid. So what we can see here, if I click through, I think the article is paywalled. This is another chart, the daily active users, daily monthly users of the MOMO app. So as I said, they've got a MOMO app, and they've also got, I think it's Tantan. It has flattened out a little bit towards the tail end of last year. But it really seems as though the market has overdone the selling, and I guess there's also generally nervousness around investing in Chinese companies, because first there was the trade war, then coronavirus started there, and now Trump is threatening to delist Chinese headquartered companies from US stock exchanges. But if you are the kind of investor that is willing to wait it out, to buy at these prices, now we've seen roughly around 20, and stick it out for 6 to 12 months, I believe that the market will eventually realize that this company is a massive cash cow, and they will come pouring back into it, driving the stock price up. So let's do a very quick look at the most recent quarterly report. I don't know if everyone reads earnings reports. They are a bit dry unless you really, really enjoy this kind of thing. These prices aren't in dollars. These are the dollar prices. But if we want to compare the quarter that just ended with the same quarter last year, we can look at the headline numbers. So as I said before, revenues are slightly down. They've had to cut back services and have lost users as they make their platform a bit more compliant. But the really exciting thing becomes the headline number for net income. So this is effectively one representation of profitability of the business. You can see that in 1 year, they have come pretty close to doubling their profitability despite declining revenues, which is not easy. So This is why I have jumped in MOMO. There are obviously risks. Some of them I have mentioned. For example, we're not sure if the US is going to start a trade war or a Cold War or some other kind of war with China. We're not sure how quickly or slowly the recovery from coronavirus might be. But the important thing is that even in trying times, if you find good businesses and you hold on to them for a long time, you almost inevitably are bound to make a good deal of profit. All right, have a good weekend. Bye.